Imagine checking your portfolio Friday morning and seeing a tiny tech stock jumped almost 20% overnight. That's what happened with Applied Digital, ticker APLD, a data center infrastructure company. They just reported their latest quarter, and the results blew past expectations. Today we'll break down what happened, from the big earnings beat to a potential deal with a cloud giant, in plain language for new investors. In plain terms, APLD's Q1 results were much better than analysts thought. Here are the headlines for the quarter, ending August 31st, 2025. Revenue, $64.2 million, up 84% year-over-year. Adjusted loss per share, 3 cents. Adjusted EBITDA, about $0.5 million. In short, the company made a lot more revenue than forecast, and the loss per share was much smaller than feared. That's a win for investors, and explains part of the stock pop. Why the beat? The press release notes a one-time boost. About $26 million of this quarter's revenue came from special tenant fit-out work, basically building out and installing equipment at the data center for a big customer. Think of it like charging a company to set up a giant supercomputer in your warehouse. It's a one-time fee. These installation revenues lifted the top line this quarter. On the expense side, costs also rose due to that work. We focus on the revenue surprise here. That $26 million one-time project was in APLD's HPC hosting business. The company is building specialized data centers for high-performance computing, HPC, think AI training, and blockchain networks. In Q1, they were fitting out a 100 megawatts building at their first campus, Polaris Forge 1, and earned $26 million installing hardware. The press release even calls these one-time, low-margin installation payments, meaning they boost this quarter's sales but won't recur every quarter. Still, it's a meaningful signal that APLD can build out its data centers and collect fees from tenants. The other big story, APLD announced they are in advanced discussions with an investment-grade hyperscaler for their second North Dakota campus. In cloud jargon, Hyperscaler is a huge tech/cloud company like Amazon Web Services, Google Cloud, or Microsoft Azure that operates massive data centers globally. In other words, APLD is talking with one of the biggest cloud players to lease a lot of space. The deal isn't signed yet, but APLD says they've agreed on most of the key lease terms and are in the final negotiation stage. If it goes through, the hyperscaler would get first rights to up to 1 gigawatt GW of capacity on that campus, an enormous amount of computing power. 1 gigawatt can power a small city. To put this in perspective, APLD's first campus is already fully leased to CoreWeave, a GPU cloud provider. They just added another 150 megawatts leased there in this quarter, bringing total committed capacity to 400 megawatts and about $11 billion in future lease revenue. The new hyperscaler deal would be at their Polaris Forge 2 site, 2 by 150 megawatts buildings to start. Management noted that getting 200 megawatts signed with the hyperscaler would raise their total lease capacity to 600 megawatts across 2 sites with 2 major cloud customers. In time, Polaris Forge 2 could expand up to 1 gigawatt, pending more power. For a beginner investor, here are the key points. APLD is a designer and builder of next-gen data centers for AI, cloud, and blockchain workloads. This quarter they showed strong growth. Revenue jumped and losses were smaller than expected, thanks mainly to finishing up some big infrastructure projects, the one-time $26 million. The exciting part is the potential hyperscaler lease. Signing a contract with a top cloud company for 200 plus MW, eventually up to 1 gigawatt, is a huge deal in the data center world. The stock reacted because investors see this as a sign APLD's business is accelerating. However, a word of caution. The hyperscaler deal isn't final yet. It's in late-stage talks, which is promising, but it still needs to be signed and relies on securing more power to the site. In the meantime, APLD is building out its campuses, breaking ground on new ones, and raising capital, so the foundation is being laid. If the lease goes through, it would anchor the second campus with a long-term, high-value customer on top of CoreWeave at the first campus. In summary, Applied Digital reported a much better-than-expected quarter and said it's close to landing a major cloud customer on its new project. That's why the stock popped. It doesn't mean guaranteed profit. It means the business shows promise. Investors should keep an eye on official announcements of a lease and on the company's progress expanding capacity. For now, APLD is positioning itself as a growing player in the hot AI/data center market, with big deals potentially coming. If you found this helpful, don't forget to like, share, and subscribe for more U.S. stock insights. Thanks for watching. I'll see you in the next video. I do my best to provide accurate and timely information, but there could be mistakes or things that change. This video is for informational purposes only and not financial advice. Always do your own research before making any investment decisions.